We move on to the next problem. In the previous problem, we came across a situation where the consideration paid for the acquisition of business was greater than the book value of the assets acquired. The excess consideration paid was for the goodwill attached to the business and was accounted as an asset. In this problem, instead, we notice that the assets have been acquired for a price less than the book values. Meaning to say, the company makes a capital profit which is then to be accounted as capital reserve. Entries are accordingly passed to record the assets, the liabilities, and the consideration. The difference is accounted as capital reserve account. The next event being the discharge or satisfaction of that consideration. This also leads to a capital profit, as the debentures are issued at a premium. That is, the price agreed for the acquisition or the purchase consideration is Rs 9 lakhs. This obligation is, however, fully discharged by the issue of debentures of a nominal value totaling to something less than 9 lakhs, which is the consideration agreed upon. The actual number of debentures is calculated in the work note. 7,500 debentures of the face value of Rs 7,50,000 to be specific. The resulting capital profit is linked to the issue of debentures and is always accounted as securities premium reserve account. The journal entry to record the discharge of the obligation reads as vendor account debit to debentures account credit to securities premium reserve account credit.